Well, welcome to this month's Grain Navigator. We're going to call this the Spring Fling because we're all getting right into the old seeding time here. And I know you guys are on the tractor and auto steer, so you guys have time to watch this little video here. It's going to be a little bit longer, but lots of good quality information coming your way. So let's get going. First thing I want you guys to do is I've removed the password on this particular issue. Because I want you guys to share this with as many people as you possibly can. So if you guys could share this with 5 farmers, that would be excellent, and we can get this program even expanded even more. So here we go. So if we can get 5 going, that would be excellent. So in this issue, I'm going to talk quite a bit about canola, wheat, a little bit of barley, and the overall complex that's going on right now. So the first question we've got to say is, can canola hit $32 a bushel? The wheat bulls and the world bears. And the real estate correction, I don't know how many of you guys have been following what's been going on in the real estate world, but it's pretty crazy right now. And of course, our old friend La Nina seems like she's sticking around for a little bit longer than originally thought, which is going to play a pretty big impact on the farm, right? So if you haven't done so already, you can always download this PDF version on the website there. So what you do is you just go to InsideAg.com, click the login button at the very bottom of the screen, and it will take you to the right spots, and you can just download it. So why do you want to sit here and watch this video maybe for an hour or so? We want to avoid making some of these marketing disasters this summer. I know a lot of guys made a lot of disasters last year, so if we can walk through some of this stuff, especially while you got time right now while you're driving your tractor and it's got auto steer, just put this video on YouTube and sit there and watch it. Hopefully this gives a good solid indication of where things will be going for in the next 3 months, and let's get into it here. So remember, again, download that PDF. It's about a few pages long and it's easy to do. The login button at the bottom of the screen on InsideAg.com. So the World Ag Stage. Fundamentally, everything about this thing says bullish all day long. If this was any other year, you'd be crazy to be booking stuff at these prices. However, technically and reality says proceed with caution. There's so much going on right now in the world that anything could happen at any time. We're at record high prices for everything. And we're at record high prices on commodities, stocks, you name it. It doesn't matter what we do. So everything is at extremes. And when we see this market, what do? You have to manage your risk. And that must be your forefront. So we're going to talk a little bit about this. And you'll notice the theme throughout everything is risk management. Things are at extremes. What do you do to manage that? Or keep that profitability the highest you possibly can, right, without the risk. So in the equity world, we have extreme overvaluation of stocks. The price to earning ratios right now are upwards above 3x of normal, and that's not very good when they're all like that, right? It means they're out of whack. And there's an extreme amount of stocks bought on margin. So if you look at this little chart here, at the end, it's gone from like 300 million or $300 billion all the way up to well over 600 billion. So it's basically a vertical line, and that's all margin money, and that's debt buying this stuff. So interest rates, another thing that's coming down the pipes with this financial world, they've doubled in 1 year. The U.S. 30-year fixed-year mortgage has gone from 2.65% in January of 21 up to 5.1% in April 22. This means that the previous payment of $5,000 a month could service $1 million mortgage. Now that mortgage is you can only service $770,000. So this is a drop of serviceability by basically $250,000, right? So you can look at that 30-year mortgage rate. And so it probably will continue going upwards a little bit here. So we want to look at this. I did some math here. I went to some calculator on some bank. And as you can see, this circled in green and yellow. At 3% interest rates, everything kept keeping the same at $5,000 a month payment. You're basically $1 million mortgage you could afford. That's what the bank says. If it went up to 10%, that's the yellow or the red circle there. You could only afford a $500,000 mortgage. So basically, it's dropped by half. So this plays a significant role in financial assets. How much it influences interest rates, right? And so what happens if interest rates go to 10%, and the banks only allow you to take $4,000 a month out on that loan because of inflation and everything like that has gone up, and they don't allow you to do as much because you can't service that debt like you used to be able to. So now that affordability index goes from $1 million all the way down to $400,000, your income hasn't gone up at all. So this is a major problem coming down the pipes. And say you couple this with, like, say 10 million people down the States or even more, all of a sudden there's a lot of pressure on the market. So this is something we want to really look at, especially in the ag community. I know a lot of land prices are going up tremendously crazy right now, and we got to look at this interest rates and the impact that it will have on the farm. So again, in the financial world, the risk level is extremely high. I think in the ag world, I think time is on our side right now, at least until July. So that's what we're going to have to deal with. So the overall market thoughts going forward here is Ukraine. It doesn't seem like this war will be ending anytime soon. And it's going to have a pretty big impact on everything, right? Especially in EU, what they're using for agricultural products, what they buy from Russia for sure. And then we also look at China. China has been in full lockdown right now. There's some kind of COVID stuff. I think there's lots more going on there with that. That's my opinion. It's going to lower their GDP, and that's going to affect us quite a bit on how much they're going to import and also export stuff, right, to us. It's a pretty big deal. There's lots of export bans happening right now with wheat and everything else with ag right now. Some of it is to combat inflation. There's production issues. There's so many things going on right now, guys, that a lot of countries are just taking a step back from exporting their own products, which isn't very good long term. Fertilizer, we can't expect this fertilizer price to come down anytime soon, especially when we see natural gas running where it's at, right? And the whole thing with Russia and Ukraine. It's going to hit a new pricing level. I'm pretty confident of that. And these price swings that we're going to be seeing are going to be exciting. It's moving pretty fast right now. In locking your prices, and you might just have to bite the bullet and buy some in the summer, maybe, right? So, and then we don't know how this Russia fertilizer complex works with places like Brazil, because they import a lot of fertilizer, right? So that's going to impact their production levels for sure. The overall market thoughts. Now, here's something that's happened again. This La Nina, the one that we had last year, isn't going away as quick as they thought. They thought it was supposed to be gone by June. Now it looks like it's going to be sticking around a little bit longer. And it looks like we're also going to be seeing this wavy jet stream. And so normally, I'm going to show a little picture here in a second. The jet stream is very consistent band around a certain latitude. Now it's going up and down. And we'll just take a little picture here. And you see how it's a nice band, and now it's wavy. That's why we saw all those extreme weather heat last year, and also some of the cold that went way down in the deep south this year. So this is going to play a major impact on growing products this year, right? Even in harvest, right? We don't know how it plays out. So let's talk a little bit about what we've talked about previously. One was we talked about the bullish scenario in everything, and I think that's still, there was dryness in the Midwest, in Canada, supply chain issues. Last month I said canola was relatively neutral. We expected the new crop to rally up to the old crop, and that's what it's doing. It's doing that right now. The market kind of went for a good rally. Now it's right back to where it was. The wheat, again, it was relatively neutral. It went way up. Now it's back down again. It looks like it's starting to rally up again. Barley old crop I thought was neutral. It was basically hovering around $9 for the longest time, and still is there. And of course, I said last time, it depends on the Ukrainian situation there. So let's talk about the new recommendations. That's kind of what you guys all really want to know. Overall, I believe this ag complex is a bullish setup. However, this year we really need to pay attention to what's happening in the overall global economy. There's so much going on right now. So much can happen so fast. We have to remember this. These prices will not be an island by themselves if we have a 2008 is repeated. The focus needs to move towards risk management and price preservation than it does speculation. We're already at record highs. Can it go higher? Absolutely it can. But at the same time, we have to protect this profit margin, right? So how do we do that? And we're going to talk more about that coming down the pipes here in the next few minutes. And we're going to expect this volatility to continue. And obviously weather is king, 100%, right? So let's continue on here. Canola, I still expect canola to be relatively neutral going into this crop. I think it's just going to float, bounce around. Unless there's a drought or something like that, I don't see it going up or down significantly. It's already had this massive rally. It was just going to drift. But when we're saying drift this time, it could move like $1 a bushel plus or minus, and that's still considering drifting, right? So unlike normal years, I think this new crop is rallying up to meet the old crop, not the other way around. Typically, the old crop starts to drift down lower come probably end of July, right? But it's happening way earlier right now. So wheat is neutral to slightly bullish. I think there's a lot of world production problems coming down the pipes. Any rumor of any problems is going to send this market way higher. Barley, again, it's a neutral market, I think, with corn acres way down. Barley has made significant strides in new crop. It's already up to that $9 new crop on feed barley. That's an amazing price, and it's amazing how fast it actually happened, right? So new crop is currently the same as old crop, and I don't really believe that's ever happened this early before we even started really growing anything, right? So if you like what you're seeing already and you haven't subscribed to my services, you want to do that right now. Go to insideag.com and you want to start, click the button that says start today and sign up for one of my programs. So let's get going on to the next program here is canola, and we'll talk about that. Canola again here is all things vegetable oil. Palm oil is the #1 source of vegetable oil in the world at 73 million metric tons. Well, canola overall is only 28. So when Indonesia put that export ban on, it really made a big impact. Indonesia produces over half of the world's palm oil, right? So canola production is likely to be down this year, so that's another bullish factor. So let's just take a quick look at this. Overall, as you can see, the consumption of vegetable oils worldwide, palm oil is absolutely huge, followed by soybean oil, and then canola oil, right, which is a gray one. So when you have a problem like you did before in Indonesia, and they drop off their exports, you can imagine what's going to happen. Well, it doesn't take a rocket scientist, right? So the palm oil production in the world is pretty big. This is 2018 prices. And look how big Indonesia is, the second biggest one. So it's a no wonder that market is just taking off, and that's going to be strong for canola. So with canola in the market zoning and timing, I already discussed this in one of my market flashes there, and there's a link there in the description there, and you can click on that and learn more on that. We won't go through that right now. So from a technical standpoint, it seems that new crop canola will rally a little bit more, probably into this range of $1,000 to $1,200, right? We're talking big moves here, guys. This isn't like it used to be where it moved like 10 cents. We're talking $2, $3, $4 a bushel, right? So this translates into like $22 to $27 a bushel. So basically, anytime you can get 25 bucks a bushel or greater, that's a good deal. You're making good money on that. We're talking about profit preservation, right? We got to remember that all the time. So if we look at this 5-year canola chart, as you can see, under the current circumstances, I think there's some major support around this, around 900 or so, right? A little bit better support around 1,000. And I think that likely range is between $1,000 and $1,200, right? And we're just going to have to see how this plays out. But as it stands right now, we don't know, obviously, in growing situation. I think the upper zone, like it could go to $1,400. That's crazy. I wouldn't bet the farm on that at any means, but technically it could do it. So you got to remember, vegetable oil is not quite as price inelastic as wheat, for example. So canola, let's talk about the risk reward management. 2001, if you still have canola left, that's pretty good. Maybe you should sell it at $25, $27. So the 22, as the price goes higher, so does the risk. And we're kind of caught between a rock and a hard spot right now. You know, some of those prices were at $25 a bushel for some canola. What do you do when it's not even in the ground yet, right, or growing? So we want to make sure we don't get into this trap of prices will never come back down again. Of course they're going to come down again. We just don't know when, and we don't know how much. One thing I've noticed here in the last little while is the prices can come down, and they come down significantly, and they probably will never go back down to that $10 a bushel stuff. But even if it dropped to like $650, which is like $13.50, this is actually going to be below some of your guys' cost of production. That's a real problem coming down the pipes. If we have a crop problem, you're going to need close to like $700, maybe $800 a ton to even break even on this canola. That is significant. That means your risk is so much more. It means speculation cannot play the same kind of role as you used to do. It means you got to lock in that profit when you can. So that's what we're talking about, is what do we do? You want to take risk off the table when possible, right? There's nothing wrong with selling 20% of your expected production at, like, say, $25 a bushel, right? That is an amazing price. And there are some good futures markets you can use. You can either do it yourself or with a grain company. There are some grain companies that offer great opportunities there. And if you want to know about that, you can give me a call. Smart contracting. I mean, if you haven't sold anything by 2021 right now of that crop, just roll the dice and see what happens. It could really jump up in July, right? Again, 2022, we're talking extreme volatility, and that's going to continue. I don't see why it would stop, considering the whole global situation. Use targets. They're the best way. Throw a target in $1 a bushel above market, right? See what happens. You've got to be comfortable with these sales, and then just put a target in for that amount. Why not try to reach like $1,200 or $27 a bushel if you're not too sure about pricing it right now, because a little bit of production risk, right? Again, I said that before, is use some special contracts that are out there, right? So the current trends and looking ahead, you want to stay along. I think this canola is going to stay along this current trajectory for a while. There's no reason for this vegetable oil market to get even better right now. Let's just leave it as it is. It's probably going to drift upwards. All the news that is in there is already in there, as supplies are going to be down, right? So we're going to need a big crop to push it back up, right? The supplies, right? Like I said, I think the market is more inclined to rally than drop right now. And I think time is on our side fundamentally, right? I think there's something coming down in July, because that's always an exciting month. It could change anything, right? And right now, I say the biggest risk factor that could destroy this market in a blink of an eye is a potential global meltdown. We saw it in 2008. There's so many similarities to what's going on right now to then. This is why I talk a lot about risk management, right? You just don't want to be holding that bag. So you want to moving forward as you're driving around in your tractor right now, listening to me with your auto steer. think about your risk tolerance there. How much do you want to put on the books? Is it 10%, 20%? Then you guys figure out how many tons you want to sell. Figure out what kind of price you want. Maybe you want to grab it at today's price, or maybe you want to put an aggressive target in. And then just go farming. That's all you can do right now. So Friday futures, this is a new thing I've added in. It's an email that comes out to my people. And then I also do a Monday thing. It comes out on Monday's top 3 things to pay attention for on this week, right? So on April 8th, we put in this kind of a fun trade there on that spread. As I talked about before, I really think that the new crop is going to rally up in the old crop. So on April 8th, it was $124. It was a spread, a difference between the old crop and the new crop. And it was actually bigger than that earlier on. And as of May 4th, this spread has narrowed into $67. And so that equates to, on 1,000 tons, basically $57,000 just by paying attention to these spreads. And I think it's going to get even narrower, so we're still holding it on our fund trades. And if you guys want to see that, just go to the website, follow some links, or give me a text, and I'll teach you how to do that. General selling thoughts on our canola market here is obviously with 2021 crop, that's basically a done deal. Most guys don't have much. They didn't have much to begin with. So I'm saying spring, summer right now, most guys are selling between $18 and $25. There's nothing wrong with selling and making a profit, guys. Let's not get worked up about that you sold some canola at 18 back in January, and now it's 25, and you're like, I'm losing money. You're not losing money. You're making piles of money. So on the technical side of things, right now, I think there's that major support around that $900. I think there's most likely we're going to see between that 1100, 1150 range. Nothing wrong with that. And then I think on the upper end is about that 1260, and the extreme, I think I have it as, let's just take my head out of there, 1420, right? So that's what we're looking at. Oops. So I'm back, and let's look at these calculated crush margins. As you can see, they're actually getting positive again. We're almost up to $50 a ton. That's all because of soybean oil. That thing's rallied up like crazy. But for a lot of this growing season or marketing season, they were in the negative. They were losing money on the calculated crush margins, right? So that wasn't very good. So we're starting to return back to relatively normal prices, which is good because that means your basis is going to be relatively strong still, and they're not going to shut any crushing plants down, right? So that would not be good. Let's just compare, since the beginning of the year, how does this look on the soybean complex? Obviously, soybean oil since January 1st of this year has gone up 37%, which is incredible. Soybeans are at 18%, and the meal is only at 2%. So obviously the meal is not being used as much because the world wants oil, not meal, right? And so that's dragged everything else up. Soybeans has come up, and obviously canola has come up too, all because of that vegetable oil stuff, right? So let's get into the wheat. I don't think there's much more to say about the canola except for just go grow it and have fun. Wheat. Wheat is becoming a forefront commodity. And what is really interesting is the mainstream media is now pushing the food shortage narrative. And that's kind of interesting. We got to pay attention to that, what that means. And there's so many countries putting wheat bans on right now with export bans and restrictions. And I really think there's something going on with wheat in the big picture on the production side. So if we understand history at all, we understand bread riots and stuff like that. If that is actually what's going on in the background, we can expect some wild, wild prices on wheat. Because wheat has a very interesting demand curve. I'm not going to get into it here because that's kind of outside of the scope of this, but it's crazy. Okay, we'll leave it at that. So, for example, just the other day, India said that they were going to have a production drop of 6% because they have a heat wave going through and a drought. 6% on India is actually huge because India is actually the second biggest wheat producer and China is actually the first. Most people don't know that. So if India loses 6%, that would be like Canada losing 25%. Could you imagine what would happen in the news cycle if all of a sudden they said Canada has lost 25% of their wheat production? It would take off and be out of control. So we have to put this into perspective. This is a pretty big deal. So with the market zoning with wheat right now, the production in the northern hemisphere is far from complete, and we can expect a very volatile summer. And I think if these problems are actually real with wheat, and I think they are, I think we can expect a significant rally even from these prices. Again, we got to manage that risk, and let's not get caught up. If we're locking in $14 CPS wheat, that's crazy. So let's look at this 5-year Kansas wheat chart. I always use Kansas because it's more reflective to our CPS wheat, and you know, makes it easier for me. Anyways, so $14 wheat, could that happen? I think it could, especially if some of these food shortages are real that the media is pumping. You just wait until the speculators get in. It's going to go wild. I think under normal potential, say 2008 high was like just under $13 or something. We haven't hit that yet. Just wait and see what happens. I think we're going to try to hit it at some point in this summer. There's obviously solid support around that $11, and I think there's also major support around this $10 plus, just under the current fundamentals, right? So that's where we're at. So the risk to reward management is, you know, if you haven't sold your wheat by now, why don't we just see what happens in July? If it turns hot and dry and these problems persist, this market is taking off. There's no doubt about it. And the market is set up for a bullish setup in 2022. And everything, however, everything outside of this particular commodity world is pointing to some sort of massive correction. We don't know when that's coming. It could be this year, it could be next year, it could be 5 years from now. So we got to be careful here. And we just don't want to get caught up in our own heads to think that this wheat market is going to go forever, because it's not. At some point, anything could happen, right? Again, I got to say this, risk management is more important than speculation at these particular prices. It's not like we're trading at $7 wheat anymore, right? We're trading at $13, $14 wheat, you know, at the elevator or farm gate price, right? We got to learn to protect that profit. It changes everything when our jeans pocket is double than it was last year, right? So if you still got wheat, let's do our smart contracting. If you still got wheat, just put some targets in, go to the lake, and have a good time. That's basically all you can do. Anyways, in 2022, again, I think using lofty targets is an excellent strategy. Throw them in, see what the market does. These targets are working excellent this year because of that, because the market is moving super fast. It can grab it in the overnight trade or when you're not even paying attention, right? And make sure you get it written down again. Make sure you know what's going on. You got to focus on, you should not be focusing so much on the per dollar per bushel situation right now. You should be focusing on the profit per acre level, right? When we're looking at these prices at $14 for CPS wheat, that equates to a $750 per acre profit easily. And I'm this is a central Alberta rough area, so I know what you guys what it's costing you guys to grow the stuff. It doesn't take, and I know what you guys get for yield. So it's this crazy profit margin. You got to protect this. There's been lots of times when you're making $0 on wheat. So now is the time to protect that. The current trends and looking ahead, Kansas wheat seems to be relatively stable and basically has been ranging down between $10, $15, and $11 in the last little while. It goes up 30, 40 cents, and then it comes right back down again, 20 cents, blah, blah, blah. It's been relatively range bound. I think it's going to have a breakout though at some point. Back in April, the spreads on all three wheats were basically zero, meaning they were all the same price, dollar for dollar. And that wasn't normal, and we're starting to see that come back into alignment where Minneapolis wheat is higher than Kansas and Chicago. And so you want to look at that when you're pre-pricing stuff. So if you see all of a sudden that, say, Minneapolis wheat is actually less than Kansas wheat, that's a signal probably not to be booking Minneapolis wheat and be booking CPS wheat and wait for that spread to widen out, right? So fundamentally, again, I'm going to say this, wheat situation is a bullish situation, and the global financial situation is, I sound like a broken record, is still there. It's coming down the pipes. So we can expect wheat to trade in a volatile bullish pattern until it figures out a new equilibrium, whatever that is going to be. It's definitely not going to be $7 anymore, but maybe it's in the $10 range, right? So once this equilibrium is established, it will need to be supported at that level, and I believe that the world financial situation will support it at that price levels, right? It's going to have to. Again, moving forward, we want to establish that amount and price that you would like to sell, then put in a target for that amount. As the growing season progresses, it is extremely important to pay attention to what's going on in the world, agronomically and fiscally. This setup is such a double-edged sword. You look at it from one side and you're like, this thing is going to go to the moon, and technically it could. I really believe that, especially because of the nature of wheat. So we could see some extremes ups or extremes downs, and that's the crazy part about this growing season for the next 90 days with wheat. It really could get that extreme. Overall, let's just do our Kansas selling thoughts. This doesn't have any basis attached to it. That's done intentionally because of, every elevator's got a different basis, right? And we can use the futures, right? So let's just look at this, and obviously Canadian dollar and all that fun stuff. Obviously, if you've still got old crop, maybe you should just sell it. It is crazy at $14, or that's picked up in the yard. New crop, let's just work on that. If you've sold any new crop, 5 to 10%, between 10, 15, 12 bucks, that's good money. I know lots of people did that. We weren't really seeing all these agronomic problems coming down the pipes, but now they're here. Doesn't look they're going to get better. It looks like we're going to be seeing some 13 pluses coming down the pipes. Maybe it's time to be booking 15 to 30% of your crop at those prices. Get caught up on your sales. I think there's major support around that $9.50. Slow uptrend, $10 to $11, and a breakout would be about $14. At that point, you've just got to pull the pin, right? Trigger, and just book some grain. So let's look at the top 10 producing countries. China, India, and Russia, right there. All three of them have some serious things going on, politically and agronomically. China, Russia, major political issues there. India and China, there's some agronomic issues. I do believe that China, because of their growing season last year, they grow a lot of winter wheat. I understand that their winter wheat didn't get in properly, so they're going to lose quite a bit of their production. Nobody knows for sure. That's just rumor and hearsay. And then the U.S., there's some dryness down there. This is one of the worst crop conditions they've seen in a long time. So we've got the top 4 of the world's producing countries, and even Canada's got some issues, are not what you'd say, well, this is great, we're going to see some bumper crops and all of them. There's not a single one of them that says bumper crop. Think about that for 1 second. What's going to happen to the wheat production if every single one of the top 4 countries are not set up for a bumper crop already? They're set up for below average crops. And that's my opinion. Anyways, the top 10 wheat producers here, let's look at this. The EU, big. Russia is like huge, 35 million tons or something. 35 million metric tons. It's crazy. Australia's pretty big. Ukraine is another big one. So we look at Russia and Ukraine, serious problems going on right there. Massive problems. What does that mean to our overall price? And, Canada's, we're 15 million tons, hardly anything. Nobody cares about Canada. So think about that for 2 seconds and be like, wow, there's some issues. And the United States is another big importer. So, and yeah. So if you're liking what you're seeing, again, we're going to just push this product stuff. You've got to sign up for some of my stuff that I push out there. Got lots of programs that every farmer needs, 100%. And let's just sign up. Okay, let's get on to going on to barley. Again, the world stage of barley is also in a bullish market. The war in Ukraine will have a major influence. Both Russia and Ukraine are in the top 10 producers and exporters. I mean, this is going to add a big impact to the Canadian barley market. I mean, where are they going to get their barley from? Well, they'll probably get it from somewhere, but Canada's right there. Corn acres in the U.S. are predicted to go down. And in addition to the corn acres going down, there doesn't seem to be an end to these ethanol mandates, right? That's important. If they really were concerned about pricing, they would get rid of these ethanol mandates and the excess corn would go into, the food supply. But they don't care. Anyways, then we got to look at this reduction in fertilizer in South America. How big of impact will this have on their corn production? So all this plays out, and it's pretty major. And so here's something interesting that I've never seen before, is new crop barley has come into line with old crop before the crop has even been planted. That is crazy. Absolutely crazy. There's going to be a reduction of Canadian acres this year. Last year was obviously a record because of what the elevators were doing there. But, we were losing not quite 1 million acres, but that's going to mean that we're going to lose at least 1 million tons. So what does that mean? Well, obviously the supply is going to go down. So since everything is becoming into alignment, new crop is matching old crop, it's always a good time when that happens this far out to be locking something in, because if we get a good crop of barley, most likely that new crop is going to drop. I think last year what was going on, we saw a double whammy on the barley. There was a big production wreck, plus the elevator put on a significant amount of barley onto the books early on, so the demand was huge. So I think it was a weird year with barley where it was a good crop, or it wasn't a good crop. It was just a weird year where supply was low and demand was high. That's what I meant to say. So that's why I think we had such a good, strong prices, right? And so we really need to pay attention to how much the corn market, how much corn is flowing into the feedlots. We know that most feedlots would prefer to barley, but price is always a factor. If this corn production is down in the States and in South America, we can expect corn prices to stay very strong, and hence barley to be strong also. So if you've got barley for sale still, 2021 crop, give me a call. I'll deal with it for you. If you can lock in 20% of your production for next year at $9 in the yard, Central Alberta, no questions asked, do it. That's all I can say. Give me a call. Smart contract, just sell it. And again, just give me a call and I'll help you with that. Anyways, current trends and looking ahead, barley markets have been basically flat since September. There's always been an opportunity to achieve $9. The front months have dropped, but the back months always seem to be around that $9 or better. And it doesn't look like anything's really going to change, right? We're going to be hitting barbecue season here in a bit, so maybe cattle are coming off feed quicker, so, and elevators just aren't putting on those sales like they did last year. Anyways, moving forward, you want to start pricing some new crop. That's just one thing you want to be starting to do. At these price levels, $9 barley is a pretty good price. Remember when $9 canola was a good deal? Well, maybe never was a good deal, but still, $9 barley at these kind of yields would be incredible. You could literally make $900 an acre revenue. Anyways, general thoughts on the barley market is, you know, $7. Some guys were selling that. Was a good price. Now things have changed, obviously. Manage that risk. Get some sales in the books. So let's look at some of the major barley producers. Again, worldwide, Europe is actually a big producer. Again, Russia, Australia, Ukraine. Canada is quite a bit, actually not that big anymore, right? We're only 7 million metric tons, right? So we're not as important as we would like to think. But then again, Russia and Ukraine are right in there, right? Exporters, Australia is the #1 exporter, followed by the European Union, Russia, and Ukraine again. So lots of issues coming down the pipes with especially Ukraine and Russia. And again, so this is what we want to talk about is we are basically done the Grain Navigator program, but this is what I want to get home to you guys is your grain marketing decisions that you guys make this year, and I can guarantee it, they will make or break the farm. And so that's what my company does. We do help you guys master these grain sales. Obviously, you can see we put a lot of work into the research that is done. And overall, you guys got to sign up for one of our programs. That's just 100%. So there's some extra reading here. It's on the website. So check that out if you want to. But other than that, you guys have a great rest of your day.